possible market movement for next week. My name is Godwin Okeke. I'm an experienced trader with about 8 years of market experience. I actually started my learning curve at the year 2013. It's Forex trader and teacher, instructor. I actually worked with the MBA Forex, instructor and MBA Forex. So very vast experience in this market. So that's not much plenty talks. Let's dive into the analysis of the week. But before I actually dive into my chart, I would like to kind of explain the kind of trader that I am. I'm a swing trader by style, but based on my experience, I can actually switch to swing trading, day trading, or even position trading. It all depends on the market condition. It all depends on my analysis, and it also depends on the type of portfolio that I am managing. You understand? Why did I say portfolio? If I'm a kind of managing the profit account, you don't expect me to swing trade because number one, you are trading under the Rex. Number two, you have time limit. Yes. So you have to trade in between the time that is given to you as a profit portfolio manager. So I normally deploy day trading system when trading prop firm accounts or competitions. But if I'm managing my own account or portfolio or for somebody else, I will use my swing trading system. So that is that for that. Let's dive into our charts. Okay, let me share my screen. Right. I make use of the trading view for my analysis. Yes, I make use of what the trading view for my analysis. Then I execute on MT4 or MT5 provided by my broker. So that's that. So the way I trade, I don't just go to the PS I normally trade. Like I trade or I narrow my trading on major PS. You could remember when I was actually doing presentation, I talked about major currency pairs. So I base my strategy or trading only major pairs. Why? Because I first of all check the dollar index to know or ascertain the strength of the dollar before I carry out my trade on Euro USD, Great British Pounds, USD JPY, gold, etc., or AUD USD. So when I carry out my analysis on my DXY, it will give me a synoptic view, an idea of what the market will do for the week. Is dollar going to be strengthened for the week, or is dollar going to be weak for the week? So this is how I carry out my analysis. So the chart you are seeing before me is that of what DXY. What I normally do, I take my trading from what the higher time frame. I start from what the monthly. Start from the monthly. This triangle shape you are seeing here is my zone. I use this triangular blue shape to represent what? My zones. And zones are where what? Multiple touches are made in the market. We have what you can see here is what's called the demand zone. This is the demand zone. This was what? A supply zone. A supply zone. And see the multiple touch. So this is a major supply zone. And here is what? A major demand zone. Demand and supply is still the same thing as what? Support and resistance. So we could say that here is what? Our resistance zone. Resistance zone is our support zone. Is our support zone. So we are still saying what? The same thing. We're about so many market terminology out there. So that's it. So I was able to what? Map out my zones for the DSY on a monthly chart. So I will scale down to weekly charts for us to see it clearly. See, these are what zones. Market was making higher high on a higher trend, higher high, until it started doing what? A kind of correction. If you check here, see what the DSY is doing. Is it like a counter trend that I'm drawing here to ascertain what the market is to do in the long run? So you see that the market made a higher high, then got to the previous high of 114.786 before the market started doing a kind of retracement. And you see that my counter trend has been what? Broken, retested, went down again to make what? A lower low or equal low with this, retesting it for the second time. So there's a tendency that this market we are seeing that the US dollars might be what? Weak for some time. Maybe next month, next 2 months, the price could do what? Calm down, even possible to this zone where we are, maybe before the end of the year. Yeah, I'm just speculating, you understand? But based on what I'm seeing here, that the counter trend has been broken. This market will still do what? Dive down to this previous demand zone. Well, I'm not actually forecasting for a long time. I'm actually trying to know what the market will do next week. Yes. So let's delete this counter trend. Now, I actually employed trend lines too in my trading. Trend lines, wherever I see 1 or 2 peaks, I join them together to make up what's my trend lines. So as this trend line, counter trend broke, the market was doing what? Making a lower low, lower high, equal low, and equal high. So here it's just like the market is doing what? A retracement. And if you check this, a what? A major zone. Let's zoom it also. You see, this is a major zone. The major resistance zone that is non-support. You can see this supply zone was broken up, resistance zone was broken when the market price shoot up to this place. Now it's a kind of what? Trying to do what? Retest it here. So there's a tendency that the market will still go up, or there's a tendency that it might still go down. This is a speculative market. If this counter trend line is broken, or this trend line you are seeing that is also a counter trend, if it's broken, that shows you that we will still, the market will what? The DXY will rally up to rally up. And when DXY rallies up, that signifies what? The strengthening of the US dollar. But when it rallies down or goes down, it signifies the weakness of what? Dollar to other peers in the market. So DXY is what? The connection or the aggregation of other currency pairs. Yes, it's the aggregation of other what? Currency pairs in the forex market. With this, it actually can let a trader to know the strength when the dollar is strong or when the dollar is weak, so that you know what to do. Not just throwing your analysis or throwing support and resistance and trend line all over there in your chart without knowing this. This is a very key secret. Many traders doesn't know this. So first of all, you come to your DXY to determine what the weakness or the strength of the dollar. So let's zoom so that you see. You can see this. So let's go to daily so that people see it properly. Look at this. So I drew this trend line because I have high, when the markets broke this trend line, this uptrend you are seeing here. Market was making higher high, higher high, higher low, 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 lower high, lower low, lower high, then a lower low. So that's what a downtrend. You can see that it puts up a pattern. It's like a what? A head and a shoulder. It's a head, the left shoulder, the right shoulder. This is a reversal pattern in Forex. So as this counter trend broke, that shows you that what the DXY has what changed direction, indicating the weakness of dollar. So dollar has been weak starting from this place. Dollar has been experiencing weakness starting from here. Okay, so this is the way this comes to make the chart from C. Now, this counter trend is actually a guide. It's like a guideline to me to know that if this market price breaks out of here, that shows us the resumption of our upward trend. This downward retracement could be what? Temporary. Can be temporary. But this counter trend line will serve as a guide for us to know if the market price breaks out of this counter trend, then we know that the dollar index has resumed what? The upward movement, and that will do what? Strengthen the US dollars. But in as much it is still going down within this the frame of our trend counter trend, then the dollar is what? Weak. The dollar is what? Weak. So if you check as at 2023 of 8th of May to the market, because when the dollar got to this major support zone, if you started buying Euro USD from here, sorry, if you started selling Euro USD from here, you make a lot of money. Yes, if you started selling Euro USD as at on the 8th of May 2023, you see that you got a lot of money because this is a major support or demand zone. It's multiple touch here, touch here, the touch here, the touch here, the touch, the touch. So it is a strong zone. So the market made its move until it encountered another word, supply zone here. A strong or major supply zone or resistance zone. Something like you can call it. So with this, with the help of this counter trend, it helps me to know that this natural trend or this small trend you are seeing through our counter trend retested it. You don't just enter when you saw that the market has broken. No, you allow it to retest. So it break and it retested, signifying that what? The weakness of the dollar. So in this place, as at Monday, 5th of June 2023, you should be doing what? buying the Euro USD. Should buy the Euro USD because the dollar, you anticipated that the dollar will be weak, or the dollar is weak. So that is how for throughout this week that just passed, trading week that just passed, you could see that Euro USD, Great British Pounds, Gold, AUD USD, they have actually be in an uptrend or in a bullish move. So there's a lot of bullish move that happened in the market while the dollar was weak for the week. So now what are we to expect next week or this trading week that we are entering? So if you check, you will see that we have a kind of minor zone around here. I normally use this yellow rectangular shape to represent my minor zones. So you can see that this is what a strong minor zone where the market has actually broken. So what I'm expecting is what a pullback, because this is a strong zone. Market made a touch here, so made a touch here, broke it here, went up, still came here. So this is a strong zone. So we should be expecting what kind of pullback or retracement to this counter trend. So we should be expecting something like this. Something like this. Data come here. Yes, we should be expecting something like this. We might make a retracement back to the counter trend we drew forward, heading down again. So these are possible moves that the market will make this week we are entering. The possible move that the market will make on our DXY. So how are we going to utilize this analysis? Let's check for hours to make it more clearer. To zoom it out so that everyone can see. So this is my charts, my analysis. So there's a possible move that the market could make this week we are entering. The market will come here, go back, come here, form what a double bottom, then get to this point, which is close to our counter trend, then what dive back down. So expect a short strengthening in the dollars, a short strengthening in the dollars as the market opens, which is what the retracement of what this very move. And if you use our Fibonacci tool, you will see that as this market broke this counter trend, broke and retested, it formed this A, B leg. So we have the A, B, C, and D extension. So let's take our Fibonacci tool here. We take this swing high to this swing low. You see it's exactly at what this move is exactly at 0.5, which is what key zones for our Fibonacci. 0.5 or 0.618 are what killer zones in our Fibonacci retracement. So our retracement level will get to this point, which is in confluence with our counter trend. It's perfectly in confluence with what our counter trend. So if it gets here, there's a possibility that the price of the DXY will get here. So what you should do, or how you deduce this or apply this as a confluence to your trading, is this: as the market opens, the dollar will get strengthened for some time, just a short period of time, before the bullish movement in the Euro USD will continue, before the weakness of the dollar will what? Continue going down to this zone, which is what? A strong demand zone or support zone. So we expect by next week, Friday, that the market might get to this point. It's speculation. I'm I cannot see tomorrow, nor am I God to predict where the market. I'm not the market movers. I'm just doing my own words speculations. So make sure that you apply what? Your proper risk management while trading. So that's that. So let's see how we apply this to our Euro USD. Let's delete our Fibonacci. So remember what I said, that the market will, this is a possible move that it will make short strengthening of the dollar, which will signify as retracement in Euro USD. Throughout last week market, today, okay, in this market that in this week market we've entered, or throughout last week, market has been bullish. In Euro USD has been buying, gold has been buying, Great British Pounds has been buying, AUD USD has been buying, USD JPY has been selling because of what? The weakness in the dollar. Because of dollar weakness that had started since on the 5th of June. Yes. So in this week we are entering, we should experience a short strengthening of the dollar before a massive drop will continue again, or a massive weakness in USD. So let's check our chart. So based on this analysis of this counter trend that I talked about, we can check it on Euro. You see that is in this exact day and time, the Euro started in what? Started selling. So you saw this counter trend broke and retested as at on the 5th of June. So 5th of June. So you come here to Euro USD, say Euro USD. Okay, let's pick this one. So on the 5th of June, remember, 5th of June. Okay. So let's check for 5th of June, this May. 6th and 5th. That's it. Let's say you entered the trade on the 6th of June, you started buying Euro USD and place your stop loss at, you entered here at 1.06701 and you placed your stop loss at 1.06036. Imagine how much you could have made. You could have made 4.4 times of your money. If you invested $1,000, you could have made $4,400 in the market just with this simple logic, secret. Show the market, but if you want to be conservative enough, you will allow this counter trend to break. Immediately this counter trend broke, you enter here to what to buy. But based on my DXY, I knew that yes, I could enter from this place. Immediately the market bottomed, I could enter here and buy and place my stop loss at 1.061. Place my stop loss at 1.06045. So the next level or zone, which is around 1.09579. So what we might be experiencing next week per se is kind of pullback to here, this point. Market could pull back here and continue the up move. This very point. So let me just use a kind of support and resistance edge that I made for my profile account traded last week. Okay, the 4 hours chart. So what we should be experiencing for later, I'll show you my FTMO demo trial 14 days competition that I partook in. Took some trade from these setups. So you can see based on our DXY analysis that we just did, you can see that we are going to experience possible what pullback. Let me do this here, please. So the market has been buying ever since on the 6th, just like I showed you. Since we entered here to buy, we made a lot of money. Market making what higher high. There's a change of what trend. The market has been making lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, a new high, before low, higher high, higher low. So there's a change in market structure. You can even use your counter trend to determine when the trend what changed direction. So the market broke our counter trend, break and retest of it. So if we entered here, we would have made a lot of money buying this point. When you enter this market here, so your stop loss here. And look at how much you could have made. That's about 5:1. That is, if you actually lost $100 here, you would have made what, $550. Yes, you would have made $550. Just this only setup we are seeing here, based on our DXY analysis. You can see on the 6th of June, we entered to buy. Check our DXY. Same thing here. On the 6th, it is 5th, the 6th of June, we started what? Buying Euro USD, ascertaining that the dollar index is indicating to you that what the dollar is weak after it broke our counter trend, retested. Markets change direction, so they're making what lower low, lower high, indicating or being a confluence for you to know that you will start what buying the Euro USD from this point. Look at how much you could have made from your Euro USD. So now this week I am forecasting that the dollar will do what a kind of pullback or retracement to our counter trend at this point. So there's an opportunity for you to do what? Sell Euro USD for a short time if you're a day trader or a scalper. But as a swing trader, will allow you to what? You should allow the market to show you what it's going to do next. Yes, allow it to pull back to this our killer zone of our Fibonacci, which is at 5.0 the Fibonacci. Then we expect it to get to our negative 27 extension this week. So the market will actually what the dollar will strengthen for a short period, then before it becomes weak in the next week market phase that we are entering. So in other words, you should be looking now to buy euro and to sell Euro USD for short time, then to buy it later for what a longer time. So if you check this analysis, let's remove this. So we should be expecting possible what pullback to either this final zone to still what die down this zone before heading up, or even to this level, this zone. So that's possibly what would happen next week. The Euro USD was do a kind of pullback correction. We check our Fibonacci, take your swing low, your swing high. Yes. So the market could what either dive down to this 50% retracement or 61.8 or 0.618 retracement before what we experience the bullish move, the continuation of the bullish move. So you as a trader can maybe seize this little strengthening of the dollar to do what, to sell the Euro USD. Then when the market gets to what, either 0.5 or 0.618, get ready to what, to buy it again. So that's it. So expect the market to get to this level. Sorry, I said the wrong way. So the possible retracement we could see is either this very point, the 50% or 61.8% for the continue with our major move to the upside. So I think that's that for this week analysis. And if we check what the Great British Pounds, you'll see that all the same retracements we are entering, what we are in the retracement phase. Yes, this also was a possible retracement too will happen based on what the analysis we carried out on DXY, that the entering the market on Sunday, Monday is going to be what is little strengthening of the dollar forward, the continuation of what the fall of the DXY or the dollar. You know, I told you if the DXY is bearish, it signifies that dollar is weak. If the DXY is bullish, it signifies the strengthening of what the dollar. So in other way around, if you want to trade the British pounds, any dollar related pair, when the dollar is weak in the DXY, you should be buying Euro USD. When the DXY is bullish, you should be what? Selling the Euro USD. So that's it. So for the Great British Pounds, US dollar is going to do what? A pullback or retracement. We check out Fibonacci, peak, swing low to what, or swing high. Yeah, you will see that the market could actually do what? Come here on 1.8 or 0.5 at this zone. Let's leave it at this zone. So expect what a reaction when you see a kind of rejection at this price of 1.26389. And you know that what is a possible move to the upside, continuation of what our previous move to the upside. So I think with this little analysis, I've been able to what, give you possible market speculation or forecasting of what the Forex market, Euro USD, Great British Pounds, even gold, we do based on our DXY. This is the best and proper way to trade. Use all these as confluences towards to filter your setup. Yes, use it to filter your setups. So I think with this, I've been able to kind of give you possible market projection for next week. Hopefully, believe that the market will do what, play according to our setup. So thank you very much. See you next time on the same channel. Thank you so much, Mr. Victor, for actually giving me what's the privilege to showcase my giftings. God bless you, sir.